Assalamualaikum warahmatullahi wabarakatuh. We are from Group 5. We'll be presenting about the financial statement analysis on two companies which belong to the same sector, which is transportation and logistics.
The first analysis is a common analysis by using a horizontal specifically on the trend percentage. Shortly, in this analysis project, we are focusing on the trend percentage analysis for a statement of profit or loss and other comprehensive for two companies, which is Sailing International Berhad and Malaysian Bulk Carriers Berhad. We are specifically focused on the revenue, profit or loss before tax, and profit or loss for the financial year for both companies. Begin with Sailing International Berhad, where the analysis result shows the revenue of the company has decreased to 92.82% in 2017, and the result keep decrease in 4 consecutive years. According to the annual report of 2019, Sailing mentions that the revenue is increased due to higher utilization of vessels and won more contracts. However, since this analysis set 2017 as a base year, so if we compare revenue figures during 2017 and 2019, 2017 has more revenue compared to 2019. Therefore, result for the analysis shows the decreasing of revenue in 2019, which 88.44%. Pandemic COVID-19 arose in Malaysia at the end of 2019, and Malaysia government announced that Malaysia will having Movement Control Order or MCO, and for Sailing International Berhad, they are facing a lower revenue due to the lower utilization rate and impacted the delayness of project implementation. Next, loss of financial year in 2018 has improved compared to 2017 and with RM 29 million, or the result of the analysis is 41.05%, or improved with 58.95%. This situation happens due to sales of newly constructed harbour tuck during the last quarter and in line with the ongoing initiative in rationalizing and optimizing cost and exposure. In 2019, the company continued recorded the loss of before tax and loss of financial year with 74.71% for before tax and 73.79% in loss for financial year 2019. Company annual report mentioned the situation happened due to the maintenance of shipyard facilities, special survey, impairment on trade and other receivable, and reactivation cost of vessel incurred. The higher loss before tax and loss of the financial year in 2021 with 138.89 for loss before tax and 131.45 for loss of the financial year. This is because of the impairment of each vessel. Next is analysis for Malaysian Bulk Carriers Berhad. Revenue for Malaysian Bulk Carriers Berhad is showing a fluctuation trend where the decreasing in the revenue figure for 2017 to 2018. In 2019, the net revenue increased by 4.19% from 2018 to 2019. From Malaysian Bulk Carriers Berhad, they mention of the increasing net revenue due to positive contribution from 3 new vessels. However, in 2020, when around the world facing COVID-19 pandemic, revenue for Malaysian Bulk also affected with 38.28% decreasing from 2019. The decreasing of the company revenue is because of the higher day, where 3,848 days for 2020 compared to 5,010 days for 2019. Another reason is lower charter rates in 2020 with 8,566 US dollar per day compared to 9,921 US dollar per day in 2019. Shipping markets performed well in 2021 amid the ongoing supply chain disruption arising from COVID-19 pandemic. Net revenue for 2021 recorded with 181.1 million ringgit Malaysia, or 91.58% compared to 130.8 million ringgit Malaysia for 2020 with 66.17%. The improvement of this situation because of the increase in charter rates in 2021 with 18,092 US dollar per day compared to 8,566 US dollar per day in 2020. Even though the higher day is lower in 2021, where 2,372 days compared to 3,848 days in 2020. Next, in 2018, Group reported the profit before tax and profit for the financial year with 264.8 million ringgit Malaysia for before tax and 263.9 million ringgit Malaysia for profit of the financial year compared to loss for 2017. This reduces loss is because of the reduce from associate and exceptional items. Another reason of this situation happened is because of the reduced fleet size, mainly due to improvement in fleet earnings on N-ship operation performance. With the declining in revenue and asset impairment, company incurred loss with 20.7 million ringgit Malaysia or 15.97 in 2020. COVID-19 pandemic also a reason of the company facing a loss. Because of the increasing in revenue, gain on disposal of vessel and reversal of asset impairment, Malaysian bulk carriers Berhad closed years of 2021 with profit before tax RM 195.3 million and 195.2 million for profit of financial year 2021. The figures indicate that from 100% in 2017, it increased in 50.8% in 2021.
Okay, let's see the current ratio for the ceiling and the Malaysian bulk. So the first one, you can see that in the result, it shows that the current ratio for the ceiling, all the financial year from the 2017 until 2021, for the ceiling is below than 1. This indicates that the company does not have enough liquid asset to cover all the short-term liability. It also means that the business are not managing well the working capital, obtaining financing or utilizing the asset properly. Okay, the current ratio for Malaysian bulk, it shows that all the financial year from 2017 until 2021 is above asset 1 2020. The current ratio is below than 1, which is 0.69 in 2020. It's because of due to the pandemic of COVID-19 in that year. However, in 2021, the current ratio increased dramatically from 0.69 to 3.4. It shows that the lowest current liability compared to the other years. This situation shows that this company is good condition to tackle the problem, to tackle the pandemic issue and settle the short-term liability. So in conclusion, the current ratio analysis shows that Malaysian Bulk Carrier Berhad has good condition company, where almost of their current ratio is above than 1, except 2020. Meanwhile, all the current ratio for the ceiling Berhad is below than 1. Malaysian Bulk Carrier Berhad are good in managing their current asset and liability compared to the ceiling International Berhad. Next, we move to the next ratio, which is cash ratio. The first company is Ceiling International Berhad, show a decreasing trend. The best condition for a company recorded cash ratio around 0.5 to 1. A cash ratio less than 1 show that the company is facing financial difficulties. So among the 5 years, only 2018 recorded the positive cash ratio, which is 0.09. Meanwhile, the other years recorded a negative ratio. It is true that during 2019, the company struggled with the pandemic COVID-19. So the company had difficulty in terms of ability to pay their current liability. For Malaysian Bulk, as we can see in the graph, the cash ratio of Malaysian Bulk is increasing. The best condition cash ratio for the company is around 0.5 to 1. It is clear that among the 5 years, in 2017 until 2021 had the best cash ratio, which is 3.08. This means that the Malaysian Bulk Carrier Berhad has enough cash to pay all the short-term debt. So it is clear that Malaysian Bulk Carrier Berhad has a good condition in terms of cash ratio. Malaysian Bulk Carrier Berhad has more cash and asset on the hand compared to the other company, compared to the Ceiling. In contrast, Ceiling International Berhad recorded a bad cash ratio in the 5 years.
First, we go to the debt ratio. So this graph indicates the debt ratio for both company, which is Ceiling and Maybulk. And the first and the significant point that we can see here is the debt ratio of Ceiling International Berhad is decreasing from 2017 to 2020, but it rises up to 0.37 in 2021. Even though liabilities and assets decrease overall, the differences in total assets and total liabilities is much bigger in 2020 than in 2021. Next, the trend of Maybulk from 2017 to 2019 is increasing with the peak of 0.63, and then it decreased in 2021, reaching the lowest debt ratio, which is 0.25. This low debt ratio is caused by the huge decrease in liabilities from 377,000 in 2020 to 158,000 in 2021. All in all, the debt ratio for both companies is good since it is all below 1.0, indicating that they have more assets than debt. Next is the debt to equity ratio. the significant point that we can see from this graph is the debt to equity ratio of Sealing decreased from 2017 to 2020, then it increased to 0.58 in 2021. The total liabilities and equity for Sealing decreased in 2021 from 2020, but the differences in total liabilities and total equity in 2021 is lesser than in 2020. Next, the ratio for Maybach started with 1.20 in 2017, which then kept rising to 1.7 in 2019 and eventually fell to the extreme, which is 0.34 in 2021. This low ratio is because the huge decrease in liabilities from 377,000 in 2020 to 158,000 in 2021, and the increase in total equity from 274,000 to 469,000. Overall, Sealing is good in managing its debt to equity ratio, but for Maybach, they have been using their debt to finance its growth until 2021.
First is current asset turnover ratio. For current asset turnover ratio for Sealing International Berhad is showing an increasing trend starting from 0.71 in 2017 to 1.87 in 2021. Meanwhile, for Malaysian Bulk Carrier Berhad is showing fluctuation trend where the ratio is decreased in 2018 from 1.31 in 2017 to 0.49 in 2018. The ratio increased for two consecutive years from 0.49 in 2018 to 1.8 and 1.48 for 2019 and 2020 respectively. The ratio ended with the decrease to 0.8 in 2021. From the result, it shows the highest ratio of Sealing International Berhad is in 2021, while for Malaysian Bulk Carriers Berhad is in 2020. The result also indicates that Sealing Company managed to improve their ability to generating their revenue using a current asset because the ratio shows an increasing trend. Even the ratios start with below 1. Meanwhile, for Malaysian Bulk Carriers Company, the situation is they are struggling in managing their current asset where the major drop in the ratio from 1.31 to 0.9. However, company managed to back on track when the ratio increased for two consecutive years and slightly dropped in 2021 due to the pandemic COVID-19. So, as an investor perspective, Sealing International Berhad is doing well in managing the current asset while Malaysian Bulk Carriers Berhad struggling a bit and back on the track. Both company affected by COVID-19. Therefore, in a given recommendation is both companies can improve on managing their inventories. Next is non-current asset turnover ratio. For non-current asset turnover ratio is showing a decreasing trend for Sealing International Berhad and fluctuation trend for Malaysian Bulk Carriers Berhad. Sealing International Berhad is facing a problem to managing their non-current asset since the ratio for 5 consecutive years are below 1, with the highest ratio is 0.15 for 2018 and 2019, while the lowest ratio is 2021 with 0.11 ratio. From this figure, it can be concluded that Sealing International figure for non-current asset is bigger than figure of their revenue or sales. Therefore, as an investor perspective, Sealing will not be chosen because it will give an impact to the net capital of the investor. Situation for Malaysian Bulk Carriers Berhad a bit different, where they are also facing a problem in managing their non-current asset, but the ratio is bigger compared to Sealing Company. Ratio start with 0.27 in 2017 and increased to 0.44 in 2018 before drop to 0.34 and 0.33 in 2019 and 2020 respectively. But the ratio increased back to 0.53 in 2021. This situation happened because of the increasing of revenue for Malaysian Bulk Company, and if we want to compare with Sealing Company where the revenue for Sealing is on the decreasing trend. As a recommendation, Sealing can improve in managing their property, plant and equipment in reducing the cost of any related to the items. So as the conclusion for asset management ratio for both companies, for current asset turnover ratio, Sealing showing a positive sign where they could increase the ratio while Malaysian Bulk is struggling but in a positive trend. Where, however, in non-current asset turnover ratio, Malaysian Bulk is a better than Sealing.
Now we move on to operating profit margin, where we can see in the graph and also in the table that Sealing International Berhad had negative operating margin in all 5 years, with the largest negative margin in 2021. Causes of this negative margin can be included as maintenance of shipyard facilities, specialized survey and reactivation costs, impairment of trade and other receivable, and larger unrealized foreign exchange losses. Malaysian bulk carriers had positive operating margin in most years, with the exception of 2020, where it had negative margin of negative 3.27%. Overall trend for the company was positive. COVID-19 epidemic may be the cause or the source of the poor operating profit margin for Malaysian bulk carriers from 2018 to 2020. The high operating profit margin for 2021 for Malaysian bulk carriers could be explained by a gain on the liquidation of subsidiaries, 25% increase in charter rates, lower vessel operating expense, the delivery of two loss-making chartered vessels, under supply, and higher than anticipated demand amid uptick in economic activity since late that year. Now we move on to return on asset. We can see from the graph on the table, Sealing International Berhad had negative return on asset in all 5 years, with the largest negative return on asset in 2021, negative 18.90%. Causes of this can be also included as increased unrealized foreign exchange losses, impairment of trade, specialized survey and reactivation expenses, and maintenance of shipyard facilities. Malaysia Bulk Carrier Berhad had negative return on asset in most years, with the exception of 2018 and 2021, where it had a positive return on asset of 35.81% and 31.11%. The overall trend for the company was negative. COVID-19 outbreak may be the source of the low return on asset for Malaysia Bulk Carrier Berhad. High return on asset can be explained by a gain on liquidation of subsidiaries, lower vessel operational expenses, redelivery of two loss-making chartered vessels under supply, higher than expected demand amid an uptick in economic activity since late last year.
The Malaysian Bulk, the ratio earnings per share increased gradually from 2017 to 2018 from negative to positive. This is because the revenue stated in 2017 is increased gradually. However, in 2019, the revenue of the company decreased gradually until 2020. The earnings per share of the company had declined due to the net decrease in net profit of the year. Surprisingly, the numbers showed an upward trend from 2020 to 2021 from negative 2.08 to 19.52. This upward trend was supported due to an increased revenue of the company. According to the financial report, the positive result of 2020 is mainly due to the increase in operating profit, as well as non-recurring item of gain of disposal property, plant, equipment, reversal of vessel impairment, and the gain of recognition of joint venture. Earnings per share for Sealing only recorded a loss in their business operation. The revenue in 2017 was negative trend second until 2019 until 2021. The revenue of getting worse and decreased significantly. So the earnings per share of Sealing company had declined and negative due to decrease in net profit in the 5 years. In conclusion, earnings per share of Malaysian Bulk Carrier better than Sealing International Berhad. The higher the earnings per share of company, the better its profitability. Higher earnings per share also prefer investor will pay more for a company share if they think the company has higher profit.
Now we move on to the conclusion, where we need to see 5 things that we have got on from this analysis of 2 companies that we have been looking at just now. So these 5 points are the one that we gain from these 2 companies that we analyzed through all the ratios and analysis that we did. First, companies must be have presenting fair and true value of the financial statement. True and value concept must be used by the director and auditors to in all corporation, in all accounting procedures. This is because any information that is concealed, distorted, or wrong has an effect of the operation and financial stability of the company. Now, second one is low current ratio. Low current ratio means that the company have low liquidity, indicating that it can cover its current liabilities. This can mean that what we can do or what we can suggest to the company is company can improve asset management and cut costs. The third one is low operating profit margin. This means that companies are not efficiently managing its expenses or not producing enough revenue to cover its costs. What we can see is that you need to look at its expenses and the revenue stream to look at the root cause. What is actually the root cause of this issue? And when companies find this root cause, they can solve it. Some general suggestion is also reduce costs, increase sale price, or improve production process to make them more efficient. Low debt ratio means that the company have good amount of cash as well as other liquid asset relative to its liabilities. Indicates the company can meet its own obligation without relying on additional debt. Low debt ratio generally viewed as a positive sign to potential investor and creditor. Now the last one, return on asset, is showing a negative and downward trend. We can see that from the negative trend on return on asset indicates that the company profitability is decreasing over time. Now this could be depicted from a wide range of factors, such as increased cost, decreased sale, or decreased efficiency. But what the company can do is boosting financial leverage, asset turnover, enhancing it, and achieving larger profit margin. The return on asset of the company can be improved, and the company can make use of its asset more than it is used now.